All right, cool. All right, guys, sorry for the delay. All right, so there was all in order. All right, cool. So let me just open this file here. I'm going to starting, right? Okay, so I know we don't have that much time, but we'll see what we can. So we'll see what we can do with the time that we do have, right? Okay, cool. So we are dealing with the 2024 May paper, so the paper that was held a few weeks ago, as a matter of fact. Right? They don't have the date on the front of it, which is strange, because normally they have the date. I guess they chose not to do that this round. Okay, so question 1 on the exam, right? So we're on the screen now, guys. All right. So on 1 November 2023, John Enterprises had cash in hand of $14.75. The business also has a bank overdraft of $11.25 on its bank account. What is a bank overdraft? Right. So you spend more money than you have in your bank account, so you have a negative bank balance. Or in this case, well, you can actually show negative values um, in a T account. So what we do is we actually just what you call it? Instead of okay, so assets normally have what kind of balance? Debit or credit? Debit. That's correct. So sorry, what we have going on here is instead of a debit balance, we'll have a credit balance. All right. Okay. So first things first. Okay. So let me open up a cash book and we'll start populating the cash book. Right. So this is so T for template. Right. So this let me just get my little thing going here. No. This that. Nope, not a 3. Right. Oh, crap. No. No. Hold on. All right. So this is on question 1. It's 1A, right? 1 part A. Um, 3 column cash book, balance the cash book at month end, bring the balances down this period. Totally discount. Okay, cool. Right. So we have some stuff going on here. Whoops. So a cash book, a 3 column. So we need date. We need details. Let's put out a 25 details. And we have discount, cash, bank, and the next side. Okay, so we could do that one at one. Right, date details. Right, so that's 25 again. Okay, cool. So let's see if we could just kind of zoom in there. All right. No. Cool. Let's bring that down. Let's come out of 150. And on top of here. All right, so cash book. All right, so date, details, discount, cash, bank, and sitting on the side. Bold, center line them. Right, so let's put the information on top, put this one below. What we'll do is we could pull this one up a little bit more because you see we only have to focus on one thing at a time. Okay, that's a little too much. Maybe a little more breathing room on the top here. Okay, so the first thing we're gonna do is put in the opening balances, right? So in the I thought it was some dollar signs. Right, 2023. So we're gonna put that here, put that here. Right, on 1 November 2023, John Enterprises had cash. Right, so cash is an asset. What kind of balance does an asset have at start? Debit or credit? Huh? Very good. Right, so we're gonna have what's going on with this thing? Hey, give yourself. Doesn't matter what's that. No, here what? So then come back on this side because you're annoying me on that side. Right. So I feel we're good there. So 01 dash November. Oh, I forgot the folio column. Crap. All right. No, I'll need the folio column. Right, and then this on this side here too. Okay, so this one. We'll need maybe 8, yeah. Okay, so we have to come out about 140. Yeah, even that's a little tight, yes, boy. All right, details, folio. Folio. Okay, right. All right, so the balance. Now, some people put the balance, the brought down piece right here, right? Balance brought down. So cash has a debit balance of 1475, and the bank has an overdraft. So again, an overdraft is a current liability because it's money we owe the bank, right? That's 1125. Okay, so maybe we could do 130. It's a little small, so let me know if you guys need me to zoom in on anything, right? Maybe I could actually, with these columns here, we could do a 20 here, a 20 here, and we could zoom back in. Yeah, I think I could live with that. Right, cool. Okay, so first transaction. Right, so sales by check total 2,630. Okay, so if we make sales, is money coming in or is money going out? Right, so if we make a sale, somebody paying us, right? So all money is increasing, right? And it says by check. Check affects what? Cash or bank? Bank. Is it going to increase it or decrease it? Increase. And since bank is an asset, assets increase with debits. So on the debit side, under bank, you're going to put 2635. Where did the money come from? It came from sales. What's the date there? The date is 04-November. Let me actually center align these things here and these things here. All right, cool. All right, hey Cable, how you doing? Morning, evening, good night. Right, next thing. We pay the following accounts less 5% discount by check. L. Smith and K. Peters. Sorry, what? Do you want the next cash flow page? Yeah, no problem. Anybody else? Oh, okay. Wait, the live one? Sorry, one second. Dengue. BuzzFeed unsolved. Where am I see them? Right, sorry. Yeah, Marcus, if you just go and pull it. Anything, right? Where the people? Right, people here. Right. Oh, you need one too, Michaela? You're good. All right. Right. Okay. So let's regroup. Uh-huh. Okay. Cool. One second. Wait, I didn't put up the thing. Right. Okay. So next item. It says paid the following accounts less a 5% discount by check. L. Smith and K. Peters. Okay, so we paid. If we are paying by check, so by check means what account affected? Cash or bank? Bank. Good. If we are paying, is our money going up or down? Down. If we are paying, we lose the money, right? So bank is an asset. It's decreasing because we are paying. And to record a decrease in an asset, that'll go on the credit side of the account. So we're going to go on the credit side, which is across here, right? Under the bank column specifically. Now, L. Smith was 840. You had to find 5% of 840, which I think is $42. and subtract it. So I think you get 798. So we do 840 multiplied by 0.95, right? And the difference will go in the discount column. All right, so that's equal to 840 minus 798, or just 5% of 840, right? Which is 42. Now that was paid to L. Smith, okay, right, on the 10th of November, right? Now after that, we have K. Peters. So again, we paid K. Peters less 5% discount. This is a cash discount, right? Now we're paying by check, and that's fine. We can still get a cash discount if we pay by check. So 1/20th of that is 46. 920 minus 46, so that's 900 minus 26, which is 874, I think, right? So check it. You could also do this. You could say, okay, let's find 5% of the 920, 46. And then to find the amount paid, take 920 and you minus the 46, and you get 874, right? And I was paid to K. Peters on the 10th of November. All right. So again, when you are paying and you are discount received, discount, right? Yeah. So when you are paying, you are receiving discount. So you have to put the amount of the discount under the discount received column, and then the net amount that was paid in the, well, cash or bank column, depending on how you pay. We paid by check in this particular case, so therefore we would Sure. So they said here, we pay the following less a 5% discount, right? So you're just going to find 5% of each of these figures. So 5% of 840. So you can put 0.05 by 840, right? Miguel, you okay how to calculate discount? Right, and after you calculate discount, you subtract it from the 840. Right, 840 minus 42 is 798, and that's the actual amount you pay. And the actual amount you pay has to go under the bank column in this case, right? Same with our K. Peters, you find 5% of 920, that turns out to be 46, and you subtract 46 from 920 to get the actual amount paid. Okay, all right. Marcus, you okay with that? Lisa, you okay with those two? Right, okay. So next one, 13th. B. French paid $1,900 in cash in full settlement of his account of $2,000. So what they're not telling us here is that we allowed B. French a discount of $100. He paid $1,900 to settle an amount of $2,000. Clearly, $1,900 and $2,000 are not the same, correct? So the difference of $100 is how much we allowed as discount. Now, he's paying us, so we are getting money. So our money is going which way? Up or down? Up. Our money is increasing. Now, how did he pay us? By cash or by check? By cash. So cash is good. Cash is an asset. And assets increase with debits. So on the debit side, under the cash column, you're going to put 1,900. Under the discount allowed column, 1,000. Sorry, 100. My bad. And then you're going to put B French, because that's where it came from. And that's, of course, the 13th of November. Captions do not understand a word I'm saying. Wow, that's horrendous. Better. Right, cool. Okay. Where are we going now? Right, so that's the 13th. So on the 16th now it says cash sales paid directly into the bank. Total 1120. So basically, somebody paid with a linked card, and money went from their bank account to our bank, right? So if we made a sale and we're getting money directly into our bank account, is our bank account increasing or decreasing? Increasing. Bank is an asset. To record an increase in an asset, we debit. So on the debit side, under the bank column, you're going to put 1125. Where did the money come from? It came from sales. On what date? Sorry, hold on. And it came on the 16th of November. Cool. Then, right, Mr. John, the owner, gave the business 3,000 by check, which must be repaid in 1 year's time. So Mr. John is the owner, he's giving the business money. So normally you'd think, hey, capital is increasing. But it says what? Which must be repaid in 1 year's time. If you have to repay the money, isn't that a loan? Okay. Now, either way, whether there was capital coming in or a loan coming in, what's happening to the amount of money in our bank account? Increase or decrease? Increase, because Mr. John is giving the business 3,000 by check. So bank is increasing. Bank is an asset, and assets increase with debits. So again, on the debit side, under the bank column, you're going to put 3,000, and you're going to put loan, Mr. John, on the 19th of November. Okay, let's see. What else we have here? We have two more. Right. Let's go. The owner took 800 of the cash in hand to deposit into the business's bank account. Okay, so here you have money going from cash into bank. We call it a contra entry. So money is coming out of cash. So if it's coming out of cash, cash is decreasing. Right? So cash is an asset. If it increases your debit, so if it decreases, you have to credit. So on the credit side, under the cash column, you're taking 800 out. Where's it going? It's going to bank. On what date? 27th of November. Hey, that must have somebody, boy. And in the folio column, you have to put a big old C. C for contra. Okay. And on the debit side, you have to show the money going into bank, right? The owner took 800 out of cash to deposit into the business. So see where it says to deposit. If it didn't deposit it yet. Now, I'll just do the contra entry. So on the debit column, on the debit side, sorry, under the bank column, you're going to put 800. Right? It came from cash. Put a big old C there. And that's the same 27th of November. Right? So these two transactions are the contra entries here. Right? So we'll put on a little color. Why not? And last but not least, the rent paid in cash total 1540. Okay, cool. So on the 30th, right, 30th November, we paid rent in cash 1,540. Okay. All right. So here's my question: are you guys okay with the recording of the transactions as it currently stands? Do you have any questions on any of them at all? Yeah. Right. So my thought process is, okay, is this money coming in or going out? So I need to know, okay, am I paying money or am I receiving money? Right? Because then that'll tell me, hey, that's going to be on the debit side or the credit side. If I'm receiving money, debit. If I'm paying out money, credit side. Right? Then next thing is, okay, is it cash or bank? So normally the giveaway for bank is it says check. And the giveaway for cash is it says cash. I say, okay, cool. Right, how much? So sometimes, like in the last transaction here with 1540, it was straightforward. Right? Same thing with the one before that. The ones where it gets a bit complicated is where you have discounts and that kind of stuff. Right? So if you have discounts, of course, you calculate the discount and subtract it. Right? You put the amount of the discount amount in the discount column and then the net payment figure which is the original figure minus the discount across there in the but there's bank or cash. And then that's basically it. So how I like to enter, so I will enter under the cash or bank column first, because that's what's being affected. And I'll say, okay, details. So as where it's coming from, and then when it happened. Right? You could go left to right to left, no matter, once you put the correct information in the correct place. Right? So is it money coming in or going out? Is it cash or bank? How much? Right? How much from whom? Or paying what and when? Long story short. Okay, so we had to use the page provided to prepare the cash book, balance the cash book at month end, and bring the balances down to the next period, and then, of course, total the discount columns. All right. So I think we'll have balances both carried down from the credit side and brought down on the debit side. All right, so check this, right? For the discount columns, we're just going to add up, right? All right. Same thing with this one too. Right, so check this, right? So look at cash. Cash had a total of $33.75 in and $23.40 out. So to find the balance, carried down the next period, we simply find the difference between $33.75 and $23.40. So that's $10.35. And then for the bank now, same thing. You're going to add up. So this side is 75.6, so this side is 27.97. Right? And now when you have the balances in, right, you'll notice that the totals now match up. Right? And you bring your balance on next time. So you can put 01-December. Sorry, 1 second. Yeah, and that is it. Right, so that's 15 out of 20 marks. And that was almost the whole first question. I think we have a bank recs piece to do thereafter, which I'll do on a separate page. Right, but of course, if you have any questions at all on any particular aspect of the cash book, including balancing off, let me know. Right. Okay. Any questions at all? Anything? All right. Scroll up. Yeah, that's the whole thing there. Yeah, don't anything up with it. All right, good to go? Okay. Let's take a look at the next question. Okay, Okay, so the following information is available for John Enterprises for the month ended 31st December 2023. Balance as per bank statement was that. Okay, check 103 for 1223 and check 107 for 830 were not shown on the bank statement. A deposit of 2270 was not reflected. Okay, cool. So prepare the bank reconciliation statement for the month ended. Okay, all right. So the balance in the bank statement was 9275. Our cash book balance for the bank is 4763. So clearly those two things are not in agreement, right? They're about $4,500 off. All right. So how do we fix that? To be honest, I'm not sure this is gonna tie back, but you know what? Let's just do it real quick. Okay. So you all have space on the paper to do it, right? Okay. So the bank rec statement. Okay. So they gave you now they didn't tell you how to do it, because you could either start with the bank statement balance, which to me is the more logical and intuitive way to do it, or with the cash flow balance, which is a backwards way, which is perfectly fine, just not as simple. All right. Okay, so balance as per bank statement. Right. So the balance in the bank statement is currently 9275, right? 9275. Now these two, so check 103 and 830. So do we have 103 and 830? No. Okay, cool. Hold on. Oh, that's for 31st December. What was the cash book for again? For the same period? That was for November. Oh, okay. Okay, no. Okay. Oh, interesting. So they weren't tacking it onto the cash book. This is just a pure bank rec, unrelated to the question above. Okay. All right. So here's how we do this, right? So checks, right? Were not shown. So these checks are checks that we pay to people. If we paid people with checks, what's going to happen to the amount of money in our account? Increase or decrease? Decrease. Now, what they're saying is that these checks are not shown, which means that they weren't yet presented by the payees. When we pay somebody, we are the payer, they're the payee. When we give people a check, in order for them to get the money, what they have to do? Carry it to the bank. If they didn't carry or present it to the bank, it's called an unpresented check, which means that in our cash book, we would have recorded money coming out because we're paying somebody. But the money doesn't actually come out until we give them the check and they present it to the bank, and the bank then processes it, which could take a whole week, right? So what that means is that our cash book went down, but the bank statement did not. In order to have these two agree, we have to subtract it from the bank statement balance, because that's what's going to happen when the checks actually get presented. They're going to take money out of the account. So less unpresented checks, right? So that's so we have two. We have 1223 and 830. All right. Did they give you a format or a space? Let's give you a space, right? Okay, cool. And it was just space below here. Okay, cool. Well, this page was blank too? Okay. So I guess you had room. Right. And then a deposit of 2270 made on the 31st of December was not reflected in the month-end bank statement. Okay, so when we get money now, when people pay us checks or we put money in the ATM, it takes some time to clear, right? What that means is the bank has to process it before it actually is registered on our account. It don't happen one time, although we wish it did, because I mean, it's our money, we put it in, but of course they have to take it, they have to count it, make sure it go to the right account, and then the account can update. So what that means is that this 9275 is missing the 2270 inflow. So what we have to do is show what happens when the inflow actually hits. And when the inflow actually hits, what happens to the balance? Increase or decrease? Increase. There you go. So you're going to add bank lodgement. Right. And then you add and subtract as the case may be. And this is balance as per cash book. All right, now we have nothing to cross check it with because this was for December and the cash book we did ended November. Right? There was no interaction between the cash book and the bank statement. Interestingly enough. Okay. Right. So I doubt they'd bring this one for you all tomorrow, but I mean, the logic is still the same. But all right. So that's that piece. So what I want to do now is I want to go through an income statement question, right, with full adjustments and these things, and then we'll take a look after. I'll give you all one to do after that, just to practice it, and then we'll look at a balance sheet after. Right now, there's a double entry question I think at the end of this paper. So if we have time and you all want to do, we can stick to that. We can try that too. Sorry. Whew. Just now feeling some power cut there, boy. Pressure. Hold on. Right. Okay. Sorry. Hold on. What? Who? All right. In class. Well, sorry, fellas. Do you have any questions on that? Yes. Okay. Ethan, what about you? You don't know. You all did bank recs? Yes or no? No. Oh, I thought you all did it, so that's why I was doing it. Okay. Well, don't worry about this then. My bad. Okay. Well, you can tell me something. Yeah, I try to only do stuff that come in the exam tomorrow. So if this is not coming in the exam, then we know. All right. Okay. So I want to switch gears, and let me just pull up the income statement thing, right, that I had yesterday. It was yesterday. Okay. I had to go to the folder. Okay. Sorry. One sec. Adapt. Right. Oh, right. Okay. There. There's solutions, not solutions. Solutions. Oh my god. Hold on. I can't find a folder. The next one. Why not here? Hold on. Am I going crazy or something? Was I not just in? Okay. Sorry. One sec. I really thought I went to this folder, and I went here to plans, and then to PoA, form 5, income statement. Right. Okay. Right. So you all should have this handout as well. So right. So just turn to this page. It says it has a 4 at the top. Answer all questions. Right. So I'm going to go through points then. All right. And this also hinges on your having come to class the last couple of days for accounts because we learned how to do the income statement from scratch. Right. So of course, if you weren't here, I'll try my best to kind of give you a short version. Let me just drink some water and wash my face because I feel like my eyes closing on my real hard. All right. So that's that one. And the next one. Right. So that one. Okay. That's fine. Okay, just give me a minute to wash my face a little bit. When I come back, we'll start going through this as an example. So find this one in the handout. Yeah, right? Okay. Now, this one is a little easier because you don't have to calculate gross profit. Here's the item right here. Receipts from customers, that's your sales revenue. And they have no cost of sales calculation is a barber salon, right? But you have some adjustments below like accruals, prepayments, and your provision for depreciation. So I want to show you those. All right, so give me one sec. Let me open up. So I'll put this down. Okay. All right, so we could just delete those things. Right, so we're gonna put John. Let's put John on top here, and we put the working on. Right, so Oinson's Barber Salon income statement for the year ended 31 December 2020. Good. Revenue, right? So the sales revenue was the receipts from customers. Right now, again, we didn't have the gross profit to calculate. We're gonna do that in the next question, right? So here, I wanted just to kind of get straight to the adjustments because we have been working the trading section for the past 2 days in class. All right, so I know Ethan wasn't here for that, so I'll give you a little bit of a rundown as best I can. Anyhow, what we want to be able to do is to cater for these adjustments, such as a prepayment, an accrual, and depreciation using both methods, right? Straight line and the reducing balance method. Now, let's go up to the trial balance, right? So capital, right? Okay, so rent. So hold on. We need to see what is done. So rent. Okay, cool. Right, so the first expense we have is rent. So rent says 4,000 and there's additional information. Rent, prepaid. So if something is prepaid, what does that mean? You paid extra, you paid in advance, right? It means that that extra you paid does not apply to the current period and therefore cannot be included in the current period's profit calculation, the income statement. How do we exclude it? We simply subtract it, right? So the rent figure, right, will be the 4,000 from on top here minus the prepaid amount of 800. All right, so you'll have 3,200 there. Right, next, electricity expense. Now, if we look at our thing here, it's only rent and general are affected. So electricity, it's just a plug and play. Electricity. Right, electricity was 1,200. Right. Now, general. So general expenses unpaid at 5. So that's an accrued amount, an amount left unpaid. So it was incurred, but it wasn't paid. So you were supposed to pay it, but you didn't, which means you owe it, right? And on top of that, it means that, hey, you were supposed to pay this, and you didn't. But despite the fact you didn't, it still goes in the income statement, right? So this is the general, right? So you're going to pull the 1,200 from on top of here, and you're going to add the 550. Right, you're adding the accrual because it was supposed to be paid, so it applies to the current period, right? Right. Next, supplies. Right. Receipts, no. Wages, no. Wages was right, and then they have just the two assets that are subject to depreciation. So depreciation is to be accounted for as follows. So we'll do the straight line method first, right? So that's all the furniture. All right, so depreciation, furniture. Right, so furniture is 5% using the straight line method. So all we have to do under the straight line method is multiply the depreciation rate by the cost of the asset. Now, we know it's the cost because it's in the debit column, because assets have debit balances. So you're simply going to find 5% of $10,000, right? So it wasn't a big amount, just 500. And the last one, which tends to be the kicker. Furniture is depreciated 5% per annum using equipment, my bad. 20% per year using the reducing balance method. Okay, cool. So 20% per year under the reducing balance method. So how do we do that now? So depreciation. equipment. Okay, so the correct calculation here is to find 20% of the net book value. How do we find net book value? It's the cost and the minus any depreciation charge on the asset. Right, so we are depreciating equipment. All right, so we have to find 20% of. Right, so the equipment, so the net book value is the cost of the asset minus the depreciation already existing. Sorry, my brain not braining right now. Right. Okay. All right, and all we have to do to find the total is, of course, just add up all the expenses. Maximize that, and then we're going to subtract that from the actual revenue earned. Right, so that's net income. Right, so net income or net profit. Right, so again, the things I want you all to see here is how to treat accruals, prepayments, and the provision for bad debts. Sorry, for depreciation, my bad. Okay, so do you have any questions on Ornstein's Barber Salon's income statement? Okay. All right, so obviously I'm not going to work through every single question wholesale. All right, so I'll give you all the answers. So just to be clear, who leaving on what time? 8. All right, okay, what about you? All right, what about you? Okay. All right, cool, okay, I'm okay with that. All right. Okay. Any questions on what I did with the expenses specifically? Like how I treated with an accrual or prepayment or the depreciation? Okay. All right. Cool. And then when you finish, copy it down, right? Okay. All right. The next question is W Watson. Now, W Watson is a little trickier because if you notice, they have purchases and sales in the same row. They have sales returns and purchases in the same row. Same thing with receivables and payables. Surprising with oh no, they do. Wow. Okay. Okay, so for this one, you're gonna have to work the full income statement, right? So here's what I want you to do. If you know what to do, go ahead and work. If you're not sure what to do, give me 1 second. I'll print out the form for you, right? Just give me 1 sec. If I teach at this school, this is my school. Yeah, I do teach here. Uh-oh. All right, give me 1 sec. Let me see the format for this guy here. Anybody else with the format or? All right. So when I give you the format, what we're gonna do is we're gonna take a little read through the same paper, because a lot of times people forget which one goes in which column, like which one is purchases and sales, which one is the returns, which one is receivables and payables, etc. Right? Now, here I have to take a walk and get something. I'll come back. talk through the trial balance for the question, so you know which figure is which figure, right? Because that's what they've been doing relatively recently, right? They've been putting things in the same column, in the same row, sorry. Like here, for example. So in the question, they have purchases and sales. Now, interestingly enough, they label them in order of appearance, right? So purchases is this one, sales is the 43.5. Now, sometimes they might not, right? They're supposed to, but they might not. Purchases is the expense. That's money you're spending to buy goods. Not so. Expenses have debit balances, right? You can always remember whatever you're spending money on, you have a debit. We spend money on expenses and assets, all right? So they're supposed to have debit balances in the initial trial balance. So the purchases figure is the 35, and the sales is the 43.5. Noted? Okay. Next one, sales returns and purchases returns. Right. So in the same order, sales returns here, purchases returns. But how do we know that? Because sales returns is when people send back goods to you, right? Now tell me something. If you sold, let's say, $100 worth of goods, and somebody sent back 20 worth of goods, it means that you didn't really make 100 because you had to refund the people, right? So you only made 80. So you subtracted. So the sales returns figure of 500 has to be subtracted from the sales figure. If you look in the format I give you, you'll see that there at the top, right? Sales minus sales returns or returns inwards. Seen it? Yeah? All right. You know what about you? Right? It's at the top of the income statement, the first couple lines after the heading, right? Right. So, and then purchases returns, of course, is when you send back goods to your suppliers. So it means you're kind of unpurchasing the item, so they have to kind of give you back your money. So purchases returns was on the debit side, sales returns debit side, purchases returns credit side, right? All right, so opening inventory, that's your opening stock, shop fittings at cost, van at cost. So receivables and pay, right? Okay, these two are also in the same line. Now receivables is an asset, and assets have what kind of balance? Debit. So we know that the 800 is the receivables, and payables is what item? It has to be the 700. But why? Because it's a liability, and liabilities have credit balances. Okay. Electricity. Okay, so nothing else here except the provision for bad debts, but we'll leave that for last. Okay. All right, so guys, go forth and conquer this particular thing. So you're doing the trading account. After we get gross profit, then we'll talk through the adjustments below. But yeah, just give me a minute or two to walk up and get some water. That might help wake me up. Because I'm real fighting a sleep here, boy. Real hard. You could use the format there, no? That one. It tells you what goes where. I'll start typing shortly. Let's give me all a minute to start. All right. So let's see if we could starting here. Because I know some of you will have to go pretty soon. I want to make sure I get to the adjustments. Oh, sorry, it's the wrong one. My bad. All right, so this is Watson. Watson is Jan 2020. Okay, good. Okay, so let me just copy and paste this across here, and we'll take out everything there. And then we will zoom in so we can see things. Oh, hold on, sorry. All right. Okay, so guys. So first things first, of course, you have to head up properly, right? So it's W. Watson, income statement for the year ended 31st December 2019, right? Now, don't forget to put your dollar signs as well. Now, you're going to start up with the sales figure of 43.5 minus the sales returns figure of 500. That's going to give us a net sales figure of 43,000, right? So far it starts off pretty simple. Sales minus sales returns is net sales. Now we have to figure out the cost of goods sold or cost of sales, right? That starts with the opening inventory. And we have purchases and, no, we don't have any carriage inwards. No, we don't. Okay. So yeah, so that's going to start with the purchases. And you have to minus your purchases returns. So just like how you subtracted sales returns from sales, you're going to subtract purchases returns from purchases. That's going to give you what you call net purchases. Just like how sales minus sales returns is net sales, purchases minus purchases returns is net purchases. Right. We add in that to the opening inventory to give us the cost of goods available. From that, we subtract closing stock. And your closing stock is in your additional notes there. Right? That's not going to be in your trial balance unless you have what you call an adjusted trial balance. Or you already have your trading account done, which we don't. Right? We are actually currently doing that. So your closing stock or your ending inventory will usually be below your trial balance in your additional notes. So that's 12,000. 12,000 from the 44,380 will give us 32,380. And you're subtracting that, so that's going to maximize here. You're subtracting that from the 43 to get the 10,620, right? That's the trading section. So I'll give you a minute or so to finish copying that down if you need it, right? And now we're going to go on to the expenses section. So here's my question. I know some of you all leaving 8 o'clock, but you all want a few minutes to try the expenses section with the adjustments, so just go through with it all. Which one? Go through it? Okay, you're still copying some stuff down? All right, okay. I'll give you a minute or so. If you want, I could always print this out and give it to you so you could fill it in after. Okay. All right. So we're going into the expenses section. So let's put this back down there. Now, let's take a browse in the additional notes first, right? So we have a couple depreciation items, both in the straight line method, right? Electricity as a prepayment, telephone as an outstanding or accrual. Salaries also has an accrued portion, and then there's a provision for doubtful debts of 15% of receivables. Okay. So what we're going to do, we're going to start from the top. All right, and we're going to call them as, we're going to leave depreciation for last, I think. Okay, so let's deal with the provision for doubtful debts, right? So the provision for doubtful debts currently exists at $80, right? And it says down here that the provision for doubtful debts must be 15% of receivables. So your receivables figure is actually 800, right? See here. What we do therefore is find 50% of 800, right? Now that's going to give us 120. But that figure is not what goes in the income statement, right? So what we do, once again, is you find 15% of the 800. That is a receivables figure. That's 120. And now, right below here, we have an existing provision for doubtful debts of 80. So right now we already have 80 in the account. We needed to go to 120. So quick question. Going from 80 to 120, is that an increase or a decrease in the provision? An increase. So, and by how much? How would you find out by how much? You subtract. 120 minus 80 is 40. So that's how I got this 40. I found 15% of the 800, right? That's 15% of the receivables that currently exist, 800. And I subtract any existing provision currently in the shop. All right? Okay, next. Right, so I have electricity 600. Now it says down here, electricity is prepaid. We subtract prepaid amounts. So you're going to take that 50 away from the 600 and you're going to get 550. Right, the telephone now, I'm seeing 100 here. Now, item 4 says telephone account outstanding. Outstanding means accrued or owing. So what do we do with accrued items? We have to add them on. So you're going to add this 22 to this 600. Sorry. My bad. I said telephone. My bad. 100. 22 plus 100 is 122. Sorry. Right. Next. After that, we have salaries. Salaries is 3,000. But what is it here? Accrued salaries. So what does that mean? It means that we didn't pay something we were supposed to. Right? So we didn't pay $500 worth of salary. So what we have to do is add that on to the 3,000 from here. 3,000 plus 5 is 3,500. So once again, you're going to add your accrued portions onto your trial balance figures. Any prepaid item you have to subtract. Okay. Right. Now the bad debts item was given to us as an expense. You can write it off as such. Oh, depreciation. I was like, wait, there's still something missing. Where are they? Van. I feel like I'm missing something because all right, hold on. Right, so check it. Oh, shop fit. Okay, cool. Yeah, look at there, shop fittings. Right, okay. So in both cases, it's shop fittings and it's straight line method. Sorry, in both cases, it's straight line. So it's not one straight line and one reducing balance. So that could come into play, right? So you find 10% of. Sorry, I literally fell asleep there for like half a second. Let's try it again. So we had shop fittings, right? So it's 10% of the shop fittings. Once it's straight line method and they're not giving you the traditional formula of cost minus cost minus residual value over EUL, as in the number of years for which the asset will be of use. That's what EUL, estimated useful life, stands for. Right? If it's a straight line method, it's multiplying the percentage by the cost. The cost, not the net book value. Right? So that's shop fitting. So 10% of 6,000 is just 600. That's the depreciation charge for the year there. And then for the last item, the van is 400. 20% per annum, straight line. So 20% of this is 1/5. So that's 800. There you have it. All of the expenses in one place. Huh? Yeah, go ahead. All right, for the outside. Okay, well, that's the income statement then. You want to print out before you go? All right, cool. Anything you just want to go over one more time? I think they said that. Listen, I think they said balance sheets will come in. What else coming? You have a list of topics. Check it out now. Let me see. Adjustment. All right, cool. All right. All right. What are you feeling? Payroll or stock valuation? Okay. All right, cool. Um, there was a past paper question. Wasn't this one? Crap. All right. Just give me a minute to do it for the printout, and I mean, good to go. that there, move that there. All right, so we'll start with this item here. Sorry. Right, so first one. So his Go Low Limited uses the last in, first out method of stock valuation. You are provided with the following information about one of the items in the inventory for the month of December 2013. So beginning inventory is 103. And we have the purchases figure here. Sorry, we have purchase. We have two sets of purchases on the 2nd and the 15th. 250 at $3.50 each, and 100 at 4 on the 15th. Now, in between that, we have a sale of 205, and after that, a sale of 1,706. So, completely worksheet. Okay, all right, let me get a worksheet here, right? It's the same thing. Let me just pull the printout there for now. Right? All right, so just give me 1 second. Let me head up my thing too. Had a date. All right, so after date, we do purchases first. Okay, cool. Oh, shucks, I don't know this. All right. Sales, okay, let's copy and paste. Sorry, my brain not cooperating now. Well. Yeah, sorry, I'm not taking long because my brain just shutting down right now. Give me 1 sec. If you know what to do, go ahead. If not, this should say balance. Okay, let's zoom in a little bit. We'll do. Nah, it's too much. I'll leave it for now. Yes. Okay, so let's finally go back to the question. Question one. Right, so there's a beginning inventory, right? So we're gonna do, let's say 2013. Okay, cool. So we'll do 2013 here. Right. Right, so it's not a purchase, it's not a sale, it's the balance. So you're just gonna record across in this column where it says balance, right? 100 on the units. And then 5. No, sorry, at 3. Right, so your opening stock is valued at 300. Okay. Now you made a purchase on the 2nd of 250. So across now under the purchases column, you're going to put 250 in the units. Cost is 3.5. And the total value will be the product of the two. 250 multiplied by 3.5, 875. So now at the end, you have 2 batches of stock. You have 100 at 3, which is of course 300. And you have second batch was 250 at 350. No. Right, sorry. I need to right, so better. Cool. My head blocking still? Okay, good. Right, so in all, you have 350 units left. And across here now, sorry, the total value is 1175. Wow. Crazy. All right, Ethan, you okay with what I have so far? All right. Now on the 5th, I make a sale of 20 at 5 each. Now, the thing is, when I make a sale, it has to come from these batches, right? It might all come from one, or it might come from a next one, whatever the case is. But generally speaking, sorry, my brain totally went blank there. You okay so far there? All right. On the 5th now, we have a sale. So that will go on the, okay, actually, yeah, I knew what I wanted to do, sorry. Right, so on the 5th, we make a sale. That sale is 200 units, 500 space fans. Sorry. All right. Now check this, right? You had how many units of stock before you made this sale? 350, right? When you sell 200, it means in total you'll have 150 from them, right? Now you're using LIFO. Now under LIFO means last in, first out. So you could sell from the last until you have some left. Or if you take it the next way, if all your first set of stuff going to be used up first, it means your last set of stuff is left. So just count units at end and you have your closing stock, right? So here in this particular case, right, this 200 will first come from, no, sorry, remember the 7 minutes for that. Okay, I can't find the message. Sorry, Ariel blank, nothing in. Ariel, sorry. Okay, reset. Say again, sorry? 5, thank you. Okay, if I sell 200 units from 350, how much I have left in total? 150, right. The question is, am I selling from the top come down, or am I selling from the bottom go up? Because it's LIFO. If I sell 200 from 250, I have how many left in that batch? 50. Did I touch the first batch? No. Right. So all I'm gonna do, copy and paste that here and change this to 50. Right. So it shows that hey, I still have that left. I sold 200 from that one, so I have 50 left, and that's the value right now. Oh, wow. All right. Now, on the 15th, now we have our next purchase, right? So what we're going to do, we're going to put that here. So skip a line, right? So 15th dash. So we're 100, 4. Right, so you have 100 at 4 as new. Right, so check this, right? After you buy a new set, you have to update your closing stock, right? So these, so after the shift down. Right, so after buying 100 more, now I'm now back to 250, comprised of the first batch that we ever bought, the second batch, and then this batch post first movie. How are you feeling there? So far, so good? Okay, cool. Now, on the 17th, we sell 175 at 6. On the 17th, sorry. We have a next sale, 175 at 6. Okay, cool. So 175 at 6. Right, so now, when time comes to break down what our stock comprises of, Wow. Dude, we sold 175, right? If you take 250 and minus 175, you have 75 left. The question is, in which batch will it come from? What method we use in FIFO, LIFO, AFCO? FIFO. So it means that first batch, right? Sorry, so you're selling 175 go up. So check it. This batch only has 100, right? So clearly you need more. If you perform the second batch, you need 50 more. Sorry, that's 50 more. And 100 plus 50 is 150, right? And we still need 25 more to make 175, right? And that'll come from the first batch. Which means the first batch now only has 75. And that there's the I can't make. I think I done there. I'm real sorry. I wanted to do something else today, but I slur my words. I drifting off into micronaps every 10 seconds. So I had to stop. Sorry. All right, but are you okay with this particular question? Yeah? All right.